So let me introduce you to Dizzy Daisy. Now, Greg, maybe not the company name you'd choose, but we'll go with it here. Now, Dizzy Daisy is a large biotech company, and they need an integrated audit. So what they've decided to do is to outsource an internal audit function to assist them with that process. Now, they had a couple of other options. They could have hired the external auditors and said, look, we want you to do the full scope of testing necessary. Well, that could have been expensive, and frankly, we might not have known there was a problem until after the audit was concluded. That might not be ideal. We could have brought on board a full-time staff to do it, or an actual full-time hired internal audit team. Again, that could have been more expensive and would have required additional infrastructure. So what they've decided to do is outsource it, and they've hired Happy Audit Incorporated. Doesn't that look like a charming bunch? They're going to help out with Dizzy Daisy's internal audit. So let me tell you a little bit about Happy Audit and why Dizzy Daisy picked them. First off, they do have specialization in biotech, so good for them. They have prior experience in this area, and they've been a public accounting firm for over 15 years. When they contracted with Happy Audit, they decided, well, we think you need one director, one senior auditor, and two staff auditors to help you complete the engagement. And Happy Audit, as you can see from the map, is based in beautiful Charlotte, North Carolina. So let's put in the third player. That's Becker. Now, Becker's the independent external audit firm, and they've been hired to complete the audit of Dizzy Daisy. Now, since this is an integrated audit, there's two elements. They've got to audit the financial statements, and they've got to audit the internal control. Now, Becker CPA was pleased to learn that they had brought on board Happy auditors and that their work hopefully can help them reduce the scope of some of their testing. In order to do that, Becker CPA needs to be satisfied with three major issues. One, are Happy auditors competent? Are they competent in the role they've been assigned to perform? Two, what's the status of their organization? Basically, are they held in good regard, right? Are they a fly-by-night operation or a well-established professional organization? And third, what was the audit approach those internal auditors used? Now, Dizzy Daisy is following guidance published by the AICPA as far as audit sampling is concerned. For all the tests they perform, they're expecting to find 0 deviations. They're setting a tolerable error rate somewhere between 5 and 7% and utilizing a recommended sample size of 40 items. So, Becker says, this is great. We're very happy that Happy auditors perform this testing. However, we cannot wholly rely on their work. So here's what they've decided to do. They realized that Happy auditors did this extensive testing, and they said, well, we also need to do 40 items. We're not going to just pick their 40. What we're going to do is pick 30 of the ones that Happy auditors did. Now, they can't just say, well, they did 30 of them and they must be good because they're Happy auditors. Really, they're a member of the staff now, since their work is being used by Becker, they're treated just like any other member of the staff team. So they want to review their work. So they're going to pick out 10 of those 30 to review to ensure the adequacy. Then they're also going to do 10 additional items that haven't been tested previously as part of Becker's testing. So what it works out to is there will be 20 items that Happy auditors performed that Becker's just going to look at, 10 more that Happy auditors performed that Becker's going to re-perform to ensure that it's adequate, and 10 additional items that Becker picked that they're going to do on their own. But it's important to note, all the work performed by Happy auditors will be subject to Becker's review procedures, as any other staff member on the Becker external audit team would be. Now, as far as the benchmarking used, we're going to apply the 2013 COSO framework. That's going to be how internal control is assessed. And the mapping used by Dizzy Daisy has been obtained from the Happy auditors because that's the framework they used for their testing. And the good news is that Becker has looked at that mapping and decided there are no gaps, that they have a pretty comprehensive look at internal control. So finally, Becker and Happy auditors have come up with this listing of major financial statement processes. As it notes, Happy auditors did the initial assessment as part of their work as the internal audit team, and Becker has confirmed that understanding. What you'll note here is that there are 3 areas identified as low inherent risk: procurement and payables, property, plant and equipment, and payroll and human resources. 4 have been identified as moderate inherent risk: financial reporting and closing, debt, inventory, and equity. And then the one area that's been confirmed as high risk is account receivable and revenue. And you may recall that revenue is one area that is always presumed to be an area of high risk. So it's not surprising that we see that here.